5 best stablecoins. Hello to you all YouTube family, welcome back to our channel, Daily Business. In today's video, we're going to talk about the 5 best stablecoins. Before we start, I would want you to hit that red subscribe button so you never miss out on any of our videos. Here we begin. Stablecoins are not that popular and less prone to price fluctuations when compared to cryptocurrency. They are the cryptocurrencies backed by a physical asset, most commonly known as fiat currency. However, they do retain much of the attractiveness of the other cryptocurrencies, giving it investors access to a new and rapidly evolving asset class. As the name suggests, a stablecoin is a cryptocurrency whose price is as stable as in constant and fixed, and whose value is tethered to a secured asset such as fiat cash. Stablecoins are not all created equally. With the expanding number of stablecoins, you need to know which ones are the most helpful and well anchored. Meanwhile, cryptocurrency is notoriously volatile, reducing mainstream participation and limiting its use as a usable platform of exchange for products and services. The stablecoin is a low volatility version of the cryptocurrency. Reducing volatility can be achieved in numerous ways, including backing the coin with a stable asset. Stablecoins are useful for investors who desire to keep their assets in the crypto space. Switching from crypto to fiat currency can be a lot more time consuming and expensive. Stablecoins give investors the best of both worlds, a stable asset within the crypto space with an advantaged transactional speed. Because of the relative stability, stablecoins also have an easier time staying in compliance with regulators. The Gemini dollar (GUSD) and the Paxos standard (PAX) are two examples of coins that win the regulatory approval of the New York State Department of Financial Services. A stablecoin is meant to limit the volatility that investors experience when using crypto. Stablecoins are usually pegged to another asset with a stable value, but an algorithm may also back them. Consumers who are looking to buy or sell non-currency goods and services may experience a huge price change during or after the transaction. Stablecoins level the playing field without a need for either party or change back to fiat. Stablecoins began to rise in popularity after the 2017 mania, after Bitcoin rose to almost $20,000, then fell by more than 50%. Investors were looking for a less volatile crypto-based store of value. The success of crypto-based coins led the Federal Reserve to announce an investigation into its own digital coin along with the governments and central banks of other countries. Types of stablecoins. Different kinds of stablecoins are available there. They are differentiated primarily by the asset that backs them. Here are the major types. Commodity-backed stablecoins. Commodity-backed stablecoins are stabilized with hard assets such as real estate or gold. The most commonly used assets to collateralize stablecoins are gold, although many use diversified baskets of precious metals. Fiat-backed stablecoins. Stablecoins backed by fiat currencies like the Chinese yuan keep a reserve of the currency as collateral. Other forms of fiat include precious metals such as silver or platinum, and commodities such as oil or corn. Most fiat-backed stablecoins are backed with dollar reserves. The reserve for the currency is administered through an independent custodian that is audited on a scheduled basis to ensure compliance. Crypto-backed stablecoins. Crypto can back another crypto as well, such is the case with crypto-based stablecoins. To counteract the higher relative volatility of backing stablecoins through crypto, the coin will maintain an over-collateralized position. In other words, the stablecoin will circulate a much lower supply against the reserve as compared to the fiat-backed currencies. For instance, a crypto-based stablecoin may issue only $500 worth of coins for every $2,000 of crypto in reserves rather than keeping a 1-to-1 ratio. Seigniorage-style stablecoins. Seigniorage is governed through and backed by an algorithm or process rather than another asset or currency. The idea of seigniorage as backing comes from a white paper from noted cryptographer Robert Sams, who puts forward the idea of Federal Reserve coin, FedCoin, that could function as such. Smart contracts deployed on decentralized platforms could serve as an autonomous backer for these kinds of coins. The best stablecoins right now. Here are the best stablecoins for you to invest in 2021. Number 5. Tether USDT. Tether is known as a stablecoin since it was created to always be worth $1, with $1 in reserve for each Tether released. On the other hand, Tether Limited asserts that Tether owners have no contractual rights, guarantees, or any other legal claims that their tethers would be redeemed or exchanged for dollars. Because Ethereum is essentially a decentralized dollar, many traders use it alongside the asset. Tether makes it easier for customers to maintain tracks of their investments because they can convert them into other assets without first going via Bitcoin. Number 4. TrueUSD. TrueUSD is also known as TrueUSD, is a stablecoin that is 100% backed by the US dollar and is one of the most liquid on the market. The cryptocurrency has lower transaction fees and higher interest rates on kept balances than fiat currency wire transfers. True USD units are created when trust tokens selected partner banks are paid. Cohen & Co., a U.S. licensed accounting organizations, assets to the adequacy of the deposits regularly. The escrows arrangement in which Trust USDs are deposited were created to give Trust USD holders with a legally clear claim on the dollar deposits. Number 3. Paxos Standard PAX. Paxos Standards aspired to maintain a 1-to-1 exchange rate with the US dollar. It was formed in response to the Tether printing incident, in which Tether was chassied by claiming to have $1.8 billion in the bank account of Deltec Bank and Trust Ltd. to back its stablecoin. PAX, or Paxos Standard Token, was created as a side project to Tether. The asset is also backed by the United States dollar, which is kept by government-controlled treasuries. Number 2. USD Coin. USD Coin is a stablecoin backed by Coinbase, the world's biggest Bitcoin broker and largest exchange holder of Bitcoin. US Dollar is the Synchrocontourism, a collaborative effort between Circle and Coinbase, established USD Coin USDC, a dollar-pegged stablecoin. Circle introduced it on September 26, 2018. USDC is managed by Center, a membership-based contourism that defies technical, policy, and financial criteria for stablecoins. USDC is issued by licensed financial institutions, backed by completely reserved assets, and redeemable to 1-to-1 ratio for US dollars. The USDC standard is supported by hundreds of enterprises, goods, and services, including exchanges, digital wallets, DeFi protocols, lending, savings, and payment systems. USDC adds value to the blockchain ecosystem as a whole. Number 1. Binance USD. Binance, not to be outdone, but also introduced a Binance USD that is tied 1-to-1 ratio to the US dollar. These are digitized US dollars that are always bought and sold at 1 BUSD for 1 USD. Binance and Paxos do not impose fees for buying or selling Binance USD, although bank and wire fees may apply. Transfer your cash anywhere in minutes at minimal cost and on the blockchain with ERC20 and BEP2 support. Trade or invest in cryptocurrency. Every sophisticated crypto trading platform allows access to stablecoins alongside unpegged cryptocurrency. Whether you're an active trader or a long-term investor, having this tool available is a smart option for preserving wealth and stabilizing portfolio value. Here are certain advantages and disadvantages of trading in stablecoin. Advantages. They are borderless as stablecoins retain the power of all cryptocurrency to move without regarding the physical borders. Financial transactions on blockchains are objectively faster than traditional processes. Stablecoin transactions don't have to wait on a third party to verify the transfer, which means no one pays fees to any third party either. Transactions using stablecoins are recorded on a public ledger that anyone can monitor, unlike fiat currency. Disadvantages. They have centralization. Unlike some cryptocurrencies, stablecoins are mostly created by centralized organizations that own the currency. Even DAI, a well-respected stablecoin that markets itself as decentralized, has scrutinized its centralized organization. They require third-party audits. Stablecoins must be audited through third parties. They may create conflicts of interest to a decentralized, trustless, or pseudonyms experience. Finally, have less growth. Stablecoins don't provide the potential for high ROIs to investors like unpegged cryptocurrency. Whenever you trade in stablecoins, be assured of what you are trading. That's all for today. I hope you liked the video. If you did, make sure to hit that like button and subscribe to the channel so you never miss any amazing video from us.